You're listening to Biotech Hangout, a live and unedited weekly discussion of all the latest news in our industry with a group of biotech insiders. I'm Daphne Zohar, and my co-hosts today are Eric Schmidt, Tess Cameron, Brian Skorney, and Yaron Werber. For more information about our hosts and guest speakers, or to listen to the most recent episode, please go to biotechhangout.com. So the broader market remains under pressure, driven at least in part by tariff threats and concerns over a potential trade war. The S&P 500 is down 6% over the last month, with this week's losses wiping out all post-election gains. Biotech seems to be in a really dark place. The XBI is down 5% this year, and small caps are down 17% in the last 3 months. The IPO market is also at a standstill. The 2024 IPO class has 16 out of 18 companies trading below IPO price and a median drop of 61%. Looking at 2025 IPOs, 3 out of 4 are trading below IPO price, and Metsera is the only exception, basically, perhaps because it's one of the few with a near-term catalyst. Some biotech and healthcare funds have been shutting down due to poor performance and redemptions, forcing them to sell indiscriminately, and long-short biotech funds are already down over 10% this year. On the positive side, Stifel put out a report last week saying that the time period for redemptions is behind us. Tess, what are you hearing on the investor side? Any reason to be optimistic as a biotech specialist investor?
Great question, Daphne. I think the reason to be optimistic is that companies that have made a lot of great fundamental progress are cheaper than they were a few months ago, right? And so for investors who are in a position to be deploying capital, it's a really rich, very rich opportunity set, both on the public side, but also private companies have made exceptional progress, really focused on how they get to as meaningful an inflection point as they can on their capital. And that means that the opportunity set is really great, right? So I think, we've seen markets like this before. It's really not unprecedented. And nothing has, really changed in terms of fundamentals. Pharmaceutical companies are still going to need to fill their pipelines. Of course, we have the increased competition from China, but I think that honestly, can make us all better. And in addition to, just helping to refine the opportunity set, can create new, company opportunities for a lot of investors. So I think that is the bright side, Daphne. As a society, we are not getting any younger. And as we get older and older, we are going to continue to need more healthcare. And drugs are one of the most efficient ways of delivering that care. That's not going to change.
Yeah, I think that you make some good points about the fundamentals and the need for biopharma innovation. Also, you pointed out that M&A is still very much on the horizon, with big pharma companies needing to fill their pipelines, also with the patent expirations coming up. M&A is important to helping biotech investors get returns and liquidity and bring generalists into the sector. And we're going to talk about a couple of small deals this week in a moment. But Eric, you've said that the sector is too dependent on M&A. Can you say more about that?
Well, I don't know that I would argue it's too dependent on M&A, but certainly the focus on M&A is probably as substantial as it's ever been. And when we're in a market like we're in, as you eloquently laid out, Daphne, where there's so much going against us, so many stocks are down every week, every day, every month. The ones that kind of shine are the ones that are acquired, right? So it's natural when you have just a few stocks in the green on your screen to focus on those names and say, wow, the only way I'm getting paid is through M&A. And that's certainly the case right now. I do think there are maybe some broader considerations. And I agree with Tess in general that there's a lot to be optimistic for. We've seen this before. We've been here before. And she well said, there's still a demand for drugs, and the way we create and reimburse and get paid for drugs really hasn't changed. But But I do think the business model of biotech is maybe potentially slightly different than it used to be, in that as soon as a drug is successfully launched for those companies that elect to go at it alone, there's this intense focus on, okay, what are you going to do for me next? What is your long-term strategy? How are you going to evolve? How are you going to prevent having a patent cliff, years down the road? So from that standpoint, maybe the investment outlook for these go it alone companies is more severe or more skeptical than it's ever been. And M&A seems like, a great way out for those companies that are able to take it.
It's an interesting contrast, though, Eric, right? Because we've had a lot of companies that have done it alone that have performed like super well, right? I'll just highlight, Madrigal as one, Bill Sibbald at the helm there, and obviously very experienced commercial leader. Verona's had, exceptional performance as well. Maybe just curious, Eric, when does it go from a like, hey, wow, cool, like you're actually doing a launch well, that's unique for a small biotech, bid the stock up, to like, all right, what are you going to do for me next? Like, when does that transition happen?
Yeah, that's a great point, Tess. That's the wrong transition that you want to get caught up in, right? If you're an independent biotech. And unfortunately, we have seen many companies do just that, try and persist potentially too long. You're correct that I think the industry is launching more drugs successfully potentially than ever before. And we've had some of the better winners in the industry stay out alone and prove investors wrong that they can launch a drug and they can near that profitability threshold. But then what happens shortly thereafter? It's usually within 1 or 2 years, right? And I'd love to hear Brian's views on this too, that the street gets very, very skeptical and says, okay, great, we'll give you credit for your cash flow. We can discount that out into the future, but we understand that cash flow will soon hit a cliff, and you're no more valuable than every penny that you can save between now and then.
Brian, do you have any thoughts on that?
Yeah, no, I mean, we all know the buy side favorite phrase is short the launch, right? So, and another one that's commonly said is the most value destructive thing a biotech company can do is launch a drug. And look, I mean, I think that way overstates the situation, but commercializing drugs is really hard, and some are fantastically successful, and others really struggle. And for better or worse, it really ties the company to actual financial fundamentals. Prior to launch, things are so ambiguous as to what the company's ultimate value is going to be. These stocks are all story stocks until that day. So that's why I think M&A becomes very important, right? Because since the birth of the sector, the thought process is always that pharma is bad at R&D, but they're good at commercialization. Biotech is bad at commercialization, but they're good at R&D, and therefore there is the marriage that kind of creates that constant view that M&A is going to be, at least to some extent, a driver of the sector. I kind of agree with Eric right now. I think it's a little bit too much of a hope for the sector, and there may be a little bit of an over-reliance that M&A is going to come and save the day somehow, rather than just focusing on the fundamentals.
Maybe I can tie in, because Eric mentioned that maybe we need the industry or the sector needs to change the fundamentals of the strategy, and maybe but biotech is not great at launching Me Too products, right? But biotech is fairly good at launching badly needed, differentiated assets that really create new markets or really address a need. And maybe that's the clincher here, is that maybe we need to accept higher risk programs that are really going to make a difference. And we probably need to invest in a lot less Me Too's.
Yeah, that's an interesting point. And Yaron, this week was the Cowen Healthcare Conference. Lots of investors, lots of people were in Boston this week. I know that Pfizer CEO Albert Bourla talked a little bit about their perspective on M&A. Can you tell us what the takeaways were from the conference, including any pharma commentary on BD and M&A?
Yeah, perfect. So maybe I'll start kind of broad strokes. So I got to tell you that the Cowen conference, and it's really been great to see, is really gaining momentum each year, and it's making sort of new highs each year in attendance, and it's becoming a little bit more of an industry conference, at least a Wall Street conference, than just sort of one kind of a firm conference. Sentiment, as we said, was poor. One of the key things is how much companies are talking about how much they can stretch their cash and how many programs they're cutting, which is good to see. Um, the Another clear situation is we saw, and I know Eric might talk about it, the Jazz Chimerix deal, let's say. There are a lot of oncology assets that are ready to launch products or in phase 3 with products that are expected to be niche, and someone probably needs to consolidate them. They're all trading at cash. It's kind of a self-fulfilling prophecy. The good news is that it's all upside at this point. So to answer your question about Pfizer, so Pfizer, because they talked specifically about oncology, they said capacity for BD, and this is coming from Steve Scala, our colleague, is going to be higher than it was last year. So this year it's going to be 10 or 15. Next year it's going to be even higher. So there's a little bit of a hint there. As you know, they're in oncology, vaccines, internal medicine, and I&I. In vaccines, they really don't see a lot of BD opportunities. They have a fairly robust internal pipeline. In oncology, obviously, they just acquired Seagen, so they have a lot going on. They don't need a lot of external innovation other than smaller that can be combinable with an ADC. So there's a big hint there. Clearly, what they're going to be focusing is internal medicine and I&I. And, it's not going to be a shocker. I&I is obviously a huge theme for us and many people. There's so much going on now. First of all, in the brain, between MMN, CIDP, GMG, I mean, these markets are really growing. Some of them are totally nascent. Multiple competitors now. But all new biology. So it's not that, yes, there is a Me Too theme with an FcRn, but there's a lot of new biology. And then you're seeing a lot going on now in myositis, in Sjogren's, in TED, in all sort of humoral rejection, in Graves' disease. There's a lot going on in COPD, obviously a lot going on in asthma, also new modalities and in inhaled biologics. So it's really incredible. That's kind of a huge theme for us. And then another one that's clearly emerging, which is there, it's not new, but it's going to become maybe more biotech centric in a very competitive way, is obesity. This ADA is not going to be the Lilly Novo show. It's probably going to be more of the biotech show. Amgen's going to have a lot of data, including their go fast and low escalation that they really are convinced will be much better tolerated. They now started their phase 3s. They announced that earlier this week. And then Metsera is going to have a lot of data. Kylera, that's the new Bain Atlas RTW spin out of Hungary. They have pretty impressive data, and they're going to show phase 3 and phase 2 data this year, and they're moving to phase 3. And of course, there's going to be obviously data from some of the traditional sort of biotechs that have been out there. So there's actually a lot going on that's leads us to be fairly optimistic. Valuations cannot go any lower, knock on wood.
Yeah, and it's interesting what you said about the Cowen conference. I think of it like there's three conferences in the industry where other banks show up, where there's a lot of industry events generally. So Cowen is now one of them. There's the Jefferies conference in London, and of course JP Morgan. So it's great to see that. So let's talk about some deals, small deals this week. Jazz Pharmaceuticals announced it's acquiring Chimerix for about $935 million, 72% premium. Eric, what are your thoughts on this deal?
Well, Yaron just mentioned that there are a lot of companies out there, especially in oncology, that have kind of niche products and would be better as part of another larger entity or organization. And I think this deal speaks exactly to that type of trend. I mean, Chimerix came out of nowhere with a drug called dordaviprone. This was just a $1 stock 3 or 4 months ago, and the trigger for them was that the FDA was able to encourage them, or at least they gained alignment with the FDA on an accelerated approval strategy in a fairly rare subset of pediatric glioma. This is not a large patient population, maybe 1,000 to 2,000 patients in the US. Of course, you can expect premium pricing, and I think, of course, they will make this into a multi-$100 million opportunity. But that was a big deal when they were at least encouraged or aligned with the FDA to file for approval based on phase 2 data. They subsequently received priority review, and congrats to the management team for executing around that value creation. So we do think that Jazz has done similar deals of this nature before. I think Jazz really has been built on an acquisition strategy where they're looking for singles and doubles and not necessarily home runs. And Chimerix, with its 10-plus-year public market history, much of that was a struggle. Again, good for them. So this is really a deal where I think 1+1 can equal 3. It's not going to turn too many heads, as you mentioned, Daphne. It's a sub $1 billion transaction. But it seems like the right thing to put dordaviprone into the hands of someone who already has an oncology franchise and can drive better margin from this product economically. I mean, this is just a financial transaction, and it makes sense. So I'll pause and see if others want to comment.
It seems to have been a well-received deal on all sides. There was another small deal, the AbbVie Gubra deal, which includes $350 million upfront and $1.87 billion in biobucks. I'd love to hear from Tess on what you think about the deal and AbbVie's move into the obesity space.
Yeah, absolutely. I think first, really not a surprise that this is a space that's very relevant for AbbVie, right? I mean, recall they have a leading aesthetics portfolio, and obviously GLP-1s do a lot more than aesthetics, but there's many ways in which it's really complementary with their with their business and their portfolio. I think this was an interesting kind of move into obesity because, it's taking a very different approach than most of the BD that we've seen, where companies are really leading with a GLP-1 and building on that. And AbbVie chose to lead with an amylin. And one of the things that is, interesting that they highlighted about the, Gubra compound is that this has a half-life that's pretty long, about 270 hours. So that can enable perhaps less frequent dosing. Now, it's interesting. I think some analysts noted that AbbVie is looking for weight loss of about 15 to 20% just on a standalone basis, for Gubra's amylin product. I think that's pretty interesting because I think that is, probably a bit higher than, what I think, we've observed from other amylins in the past. So it is an interesting entree into the field, and would not be surprised, to see this, followed by perhaps, some smaller deals to, continue building a portfolio in this space.
Yeah, thank you for summarizing that. It's interesting that some of these companies have been slower to get into obesity, and I know Pfizer also said something recently about it being almost too late for them to get in. So it's just interesting to see how different pharma companies are looking at what has been a very hot space.
Yep.
So,
And just to add something
go
on
ahead.
top of that, I just say,
Yeah.
it's interesting because I don't think it's ever too late for something that's different, right? And what Yaron was saying about obesity not just being a big pharma game, but really being a biotech game, we're seeing that with the work that several biotechs are doing, where Metsera is coming out with with a monthly, and they're working on the oral peptide, and those have a potential to be differentiated, right? So and we see other other companies, Verdiva, also working on an oral peptide that has a long half-life, and can potentially that could potentially improve tolerability. So I think it's important to remember that these are big markets, and when we've seen such big markets in the past, there's a lot of room to make solutions that are better than the first generation. And so I think that continues to be a big biotech opportunity, even with good products on the market.
Yeah, for sure. And it seems like the opportunity is shifted towards tolerability, muscle sparing, and other areas as opposed to increasing efficacy. But it's a really interesting space to continue to watch. A few weeks ago, actually, you were on this episode when we talked about these so-called zombie biotechs, or what I prefer to call fallen angels. And these are companies that have a significant amount of cash, but had a pipeline setback and are now trading at a negative enterprise value. There is one, I think one or two obesity companies in that mix, but we're now talking about just broadly, there's a lot of companies like that out there. And we talked about ways that these could return value to shareholders, which includes reverse mergers, acquiring new assets, and also one that's been less popular, liquidating and returning cash to shareholders. So Tang Capital has been very active in identifying these opportunities and has been in many ways an unlikely white knight for shareholders in these companies, offering them a way to cash out. And Adam Feuerstein was on a few weeks ago and we talked about this. He wrote another piece this week about Tang. And what the news was this week was that Tang had offered Acelerin an unsolicited $3 per share acquisition offer, but they announced this week that they're sticking with their planned merger with Alumis and they're turning down that offer. Acelerin stock dropped 13% after the news, showing some investor skepticism about the merger, which ultimately time and trial results are going to tell if the merger is a smart move or not. But it sounds like there's more pressure from shareholders to take these types of cash deals and less patience for reverse mergers or just seeing how these different theses play out. Brian, I'd love to hear what you think about this generally, and then also if you could talk a little bit about one of these fallen angels, which is Pliant Therapeutics. And so let's start with any commentary you have generally, and then we'll talk about Pliant.
Yeah, thanks. So yeah, I mean, maybe in general, I mean, obviously it's a big problem for the sector. I don't know what the latest count is, but you know, there's for the last several years, there's generally been somewhere around, you know, at least in excess of 100, but upwards of I think at one point 200 names that were negative NPV, which really indicates that shareholders are valuing the company as if the cash that it has in the bank is just going to be invested to be a zero, right? That the assets themselves hold no value and you'll just burn. And you know that's resulted in a lot of structural changes to companies. Right, you see a lot of reverse mergers occur. You know, some shareholders have been activists with some of these names, trying to force capital to get returned to shareholders instead. And you know, obviously the Alumis Acelerin deal is one example of that. With Tang Capital, you know, I would just say I cover Alumis, and I would say I do think it's a really, really good deal for Alumis. You know, I think it's a fantastic infusion of capital. You know, if the shareholders of Acelerin have confidence in the TYK2 program at Alumis, I think they're getting a good deal there. But that's obviously a point for debate. But you know, when we kind of talk about zombie companies with a lot of cash, Pliant Therapeutics had a setback this week. They wound up discontinuing a phase 2b study in idiopathic pulmonary fibrosis called the BEACON-IPF study. And this came following a DSMB recommendation due to an imbalance of unadjudicated IPF-related adverse events. Stock's down about 40% this week. But this has kind of been a slow car crash over the last month. It's down 80% over the last month. This was just kind of the final nail put in the coffin for this study. But it started last month when the DSMB initially recommended pausing enrollment in the study. The company then assembled an outside expert panel to review unblinded data from this study. So this week just kind of marked the end of the program. But now the company's sitting at $350 million in cash at the end of the year. And as of today, it's sitting about $100 million in market cap. So we're talking about $250 million net cash above market cap. So you know, it's part of now this list of very long negative EV names in the sector. Not to go on a tangent, but Biogen actually had a drug in development for IPF with a similar MOE, alpha V beta 8. This was alpha V beta 6, but both utilizing alpha V integrin subunits. And it discontinued it after seeing an imbalance in IPF exacerbations a few years ago. So targeting alpha V has been a bit of a rough road. The company has a number of other alpha V targeting drugs. So I think that negative EV sentiment kind of implies that the market is reading that this target, or at least the subunit, might have some broader issues. I would just say that IPF has been a very tough disease overall, and clinical trials here have been particularly difficult to run. I don't know if anyone else has any thoughts there.
Yeah, one of the things that was interesting about Pliant was the stock traded down sharply before the original DSMB announcement. And what was happening was apparently they had updated something on clinicaltrials.gov about recruiting status in the US. And that, I don't know who picked up on it, but the stock traded down quite a lot. I think it was like 40% before the announcement. And then that announcement came out. So this has been, as you said, sort of a slow train wreck. I am conflicted in the area of IPF, so I won't comment specifically. I do think that there's some interesting programs, but love to hear from anyone else about Pliant or IPF more generally.
Really challenging space, very big unmet need, right? So Daphne, I assume you're talking about all the work that the Biotech team is doing on IPF and really coming back with a better version of Esbriet, which is one of the approved drugs. I think what part of the challenge here is there are really just a few mechanisms that we have seen work in IPF, right? And there's a lot of room to improve, primarily on the tolerability profile of some of the drugs that are currently approved for IPF, and it's good that there's important work continuing on that.
Maybe if I could just go back to the Alumis-Aceleron merger that the 10 Capital Group tried to thwart earlier this week. Like Brian, I cover Alumis, and I think this is a good deal from their standpoint. But I also want to give a big shout out to the board and the management team at Aceleron. They had the potential to become a biotech zombie, Daphne, as you mentioned, and they took very quick and swift action, thoughtful action, in my opinion, to prevent that from happening, right? So whether it's Tang or Alumis that in the end ends up merging with Aceleron, the easy thing to do if you were Aceleron would be to take the money you raised that was initially dedicated to what's now a failed project and reinvest it into pipeline drugs that, previously you didn't think were deserving of capital and had prioritized accordingly. And they chose not to do that. Instead, they chose to essentially lay off the workforce, seek an alternative route to deploy the capital. And I think it's going to be a more efficient route than throwing good money after bad. So we don't see this happen enough, in my opinion. And again, I just want to give a positive shout out to a team that took quick action to try and make the most out of its unfortunate lot in our industry.
Yeah, that's a great point, and I agree with you 100% that boards have a responsibility to think about how they create the most value for shareholders, and sometimes there's conflicting, there's management and board, and there's a sort of bias to continue doing and spending, and it does take a lot to look at things differently and make a big strategic shift such as this, or such as returning cash to shareholders. So I agree with you 100%, and kudos to the board and the team that they're willing to do that. So switching gears, we had talked a little bit about biotechs and their ability to launch drugs. Biohaven, in their former form, were one of the few successful biotechs launching a drug. New Biohaven had some news this week. So I'd love to hear from you, Brian, on the Biohaven news.
Yeah, great, thanks. So, I don't know what it's about me that court's coverage of controversial names, but this is certainly one of them. They had news this week. They have an interesting, somewhat differentiated PR strategy. They sort of provide very general updates, or I should say they'll update multiple programs at once. And that may be due to the fact that they're, at any given time, they're running like 15 or 16 different programs. So updating individual programs is very hard. But, periodically they provide a number of program updates at once. And that's what we had this week. And I think, one of the things that jumped off the page initially to people was they had a bipolar disorder study that they announced did not hit the primary endpoint. This is for their KD7 channel activator. I actually think expectations here were pretty much zero. I really didn't have, the only calls I really had on it is to sort of gauge what it would mean for Xenon, which also has a KD7 lead program. in a number of indications. And look, I think the reason here is this was an acute mania episodes in bipolar disorder, and there really wasn't a lot of preclinical or clinical evidence that Kv7 would have an impact here. I think the majority of Kv7 programs, including Biohaven's rest of their phase 2 and phase 3 studies, are not in mania, but more looking at epileptic seizures or depression. That seems to be where the focus is. But I think for Biohaven investors, and where the controversy kind of really sprung out, is really on their molecular degrader program. They have a lead program targeting IgG, and Yaron kind of mentioned this in terms of the FcRn space, but they're sort of trying to go head to head with the FcRns out there in terms of rapidly lowering IgG. And the debate here, has really been multifold. The data has trickled out very slowly, but it does have very, very robust reductions in IgG. They announced this week at 1,000 milligrams, they're seeing an 84% reduction following 4 doses. So this is numerically better than we've seen for the FcRns. I think a big part of the argument is it's not quite up to par with what the preclinical modeling was showing at Biohaven, and is not really, a standard deviation beyond what the FcRns are showing. I think if you look at the multiple ascending dose study for efgartigimod, is about a 75% reduction over 4 weekly doses. So the argument now is coming to market years afterwards, is maybe a 5-10% relative improvement in IgG reductions. Is it gonna be meaningful? Now I sort of love this degrader story overall. I think while this is the lead drug, they have a robust pipeline of other degraders. At JP Morgan, they had IgA nephropathy data for a Gd-IgA. One degrader showed, really what I think is game-changing ability to rapidly reduce this pathogenic factor here. But they're really going after many, many different programs. And I think this IgG data, while I do think it is competitive in and of itself, it really kind of highlights the ability to do this to extracellular proteins. I think you're going to hear more and more about these extracellular protein degrader programs. Biohaven's sort of the main public one, but there are a number of other ones that are private that have very strong backing. Carolyn Bertozzi's Lycia, and I know, Tess, you're on the board of Avalar, so I'd love to hear any thoughts that you have on the subject as well.
Yeah, absolutely. Really important space, and certainly encouraging to see such a strong profile coming out of Biohaven. So, as you say, more to come.
If we have a second, maybe let me chime in, because I think very apropos, and Brian, by the way, we were complimenting you on our little chat about we love the fact that you have controversial stocks, because you have opinions and you take them on. So kudos to you. But on the comment on IgG, so we're all waiting for the Immunovant data, which is going to test, obviously more potent IgG reductions. We saw everyone's good friend Med Klein, who's a guest here frequently at our conference. That data is expected imminently. I don't think they know the data yet, but clearly they're expecting a dose response. It's probably not going to be completely linear, like a graph, but it's going to be obviously fairly evident. But the placebo effects, and I think this is exactly what Brian is talking about, there is no necessarily linearity between IgG reduction and clinical outcomes, because these are complicated disorders. And so what's going on in GMG now is you can see the data, and I think this is what Roivant and Immunovant are intimating. The placebo effect has gone up in GMG. So the delta, between active and placebo is shrinking, even if you can achieve a higher reduction, let's say an MG-ADL on the clinical endpoint with slightly better IgG reduction. So it's a little complicated. The good news is I think there is some data suggesting that you can go fairly low on IgG without impacting infections. That was also discussed at our conference. So but it might be getting to the point, as you said, that we're getting fairly potent, and then it's up to the clinical trial design to kind of work out.
Thanks, Yaron. And I want to stay with you. We were talking about M&A, and obviously one impact on M&A is when M&A goes south. So BMS decided to discontinue a program they acquired via $4.8 billion purchase of Mirati Therapeutics. this week. So, Yaron, what are your thoughts on this decision and any implications beyond BMS?
So, this is really interesting, and this is real innovation. We used to cover Mirati, and then our colleague Tyler covered it. So MRTX 1133 was essentially the first G12D inhibitor. As we all know, it's highly expressed and involved in pancreatic cancer and in some of the other solid tumors, a huge unmet need. The challenge with that compound, and many remember, it was originally IV, and the PK was fairly challenging, so they made it into a liposomal formulation, which is always tough, but may be acceptable for pancreatic. And then they took that different formulation, which they really comment much about, into an oral. And it failed. The compound always looked very good preclinically in terms of potency, but the issue, and it failed because of PK. I think that this, along with the PRMT5, which so far has been a little disappointing as a class, but potentially Amgen and Mirati's compounds might not be best in class. There's some other ones coming behind. Um, have that acquisition is disappointed a little bit, certainly on the commercial side, despite the expectation that Mirati will be win the market. Amgen is still the number one brand in the market. So it just shows, M&A, as we know, is complicated. We always advise going earlier and taking clinical risk as opposed to buying something later that's quote unquote more de-risked but fairly expensive.
Thank you. So I want to switch gears and move towards some of the new administration related news. So we'll start with RFK. I heard there was a second death in the Texas measles outbreak today. I don't know if that's been confirmed yet. I was interested to see that RFK put out a statement earlier this week that sounded very pro-vaccination, but there were some mixed messages in there. Tess, what are your thoughts on RFK and just generally the outbreak, and any thoughts on vaccines in general?
Yeah, it's obviously very unfortunate, to see that the outbreak continues to grow. I think, CDC, updated cases today. I think it's at, around 225 cases. And as you said, we've seen multiple, deaths at this point. I think the CDC has one confirmed and one that they are, checking on. And, I think, Daphne, the Fox News op-ed that RFK wrote, it was interesting because if you looked at the headlines, I think the headlines looked very positive. And then you kind of read through it and it was like, ooh, I don't know, like, doesn't really sound like your full endorsement, because it was a little, to me, and I love others' impressions, because maybe I'm reading this with, with the history of other statements that he's made. But to me, it was a little wishy-washy around just like, rather than saying like, rather than a more kind of like full endorsement of vaccines as the the solution to this, it was really emphasizing, hey, there's an importance of individual choice, and you've got to understand, like, you need a very balanced view on safety and efficacy. That's kind of like, okay, does that mean that like the view now is like imbalanced? Like, what's kind of like the layer behind, these statements that are maybe not quite as robust? And I think individual choice obviously is, a really important factor here, but, individual choice when, there's a very robust understanding of just how important it is and how life-saving it can be, to have access to something as, fundamental as the MMR vaccine. So it struck me as, strong headlines, and then a little fuzzier beneath the surface, especially when we consider, some of the other statements and some of the actions around ACIP. But certainly interested if others have a view that's maybe a little rosier than mine.
Yeah, I definitely had the same impression. So the headlines were, definitely very pro-vaccination, and then if you went and you read down, it said things about, I think it was fish oil. I mean, it was definitely a mixed message. And I was curious actually to hear from you, Eric, because you were following the McCary hearing. he was asked about vaccines, and it seemed very similar in terms of the messaging, where it was directionally positive, but not as definitive, probably as what most in our industry would like. Would love to hear your thoughts generally.
Yeah, I mean, maybe just first another comment on RFK Jr. and Tess's analysis, which I agree wholeheartedly with. I mean, how could you not read anything from the NIH or the NCI or sorry, not the CDC or other HHS related agencies these days with a little bit of a prejudiced eye? And actually, just as we were talking on this webcast, there's a report from Reuters that is coming out saying that the CDC is planning a large study into the link between vaccines and autism, a link that many of us believe has already been completely debunked. So with those types of headlines out there, I mean, what's next? NASA is going to plan a study into whether the Earth is round. This is just getting to be a little bit absurd, and it's a very unfortunate for those of us who feel that public health and safety is at risk here. Moving to the question of Marty Makari's hearing, I thought it was pretty boring, to be honest. Daphne, I didn't think we learned anything. He sort of played the game not to lose. I think it's a foregone conclusion that both he and Shadabari are going to be confirmed to their respective positions of FDA commissioner and head of the NIH. But to me, they knew that, and especially in terms of the commentary that we heard around vaccines and what they may or may not do. I thought Makari kind of took the fifth. I thought he just said, look, I'll deal with it when I get into office. I really don't have a view now. I'll take an analysis-based approach and follow at least the data. So maybe from that standpoint, it was a little bit better than what we've heard from prior confirmation hearings from this administration, but I don't think we learned a thing.
Can I throw a quick question, unscripted? I think I might have asked this like a few months ago. A year from now, are things better, the same, or worse than we're thinking they're going to be now on the FDA HSS level?
I think that's a great question, Yaron. I mean, I'd be really curious as to how people feel. Obviously, when Makari does get into the FDA, he's going to inherit some troubles, right? A low morale agency that feels like it's been pushed around and deprioritized. So how he deals with that, first few months of his administration, I think is going to be extraordinarily telling. And I just am not sure what the outcome will be.
Same. And then it can kind of go both ways on the vaccine stuff, right? I guess, there's a bear case that like, hey, do things get worse because, there's more, there's a lot more attention on things that we think have actually been appropriately debunked in the past, like this link to autism. But there's also the potential for things to go the other way, right? Where it's like, oh my gosh, this like crazy measles outbreak, and like, why did so many people die? And like, let's not do that again. Like, who wants to be like an outbreak like president, right? So it's hard. That one's kind of hard, and maybe that one's kind of hard for me to gauge in terms of where I could go, and I can really see kind of equivalent arguments for how things could get worse, and also how things could get better. Unfortunately, I think the way that things get better is reminders that vaccines are really important for public health, and unfortunately, those reminders tend to come at the expense of public health at some point.
Yep, these are all good points, and we're going to have John Crowley, who's the CEO of Bio, on next week, and he's been a little bit closer to the administration. I think he can comment. I have heard generally that Marty Makari is viewed as somebody who's somebody that the industry can work well with. So we'll stay tuned on this. But related to this topic, we were on break last week when Pfizer announced that former FDA Director Patrizia Cavazzoni had joined the company as CMO. And the move sparked some mixed feedback, including criticism on the quote revolving door between the FDA and Big Pharma on the one hand, and then positive feedback from others who note the importance of cross-pollination and expertise. Brian, I'd love to hear your perspective on this.
Yeah, I certainly have opinions on this. Our weekly recap note to clients actually was titled "Revolving Regulatory Door Triggers Synchronous Face Palms," and I think at the surface we look at this and just given the Trump administration's current positioning, some of the people high up in health, whether it be RFK Jr., Callie Means. Just the idea of Pfizer hiring Cavazzoni directly from FDA just seems like really bad PR. I mean, I would think like RFK and Callie Means heads are exploding at just hearing about this. And so now you have Scott Gottlieb there as a director, you have Cavazzoni as chief medical officer. And look, I mean, there's certainly a ton of criticism about the revolving door between regulatory and industry. And, we all look, I use consultants who are ex-FDA people. They do very well. They're some of the most high paid consultants that we use. Certainly there's no shortage of them who have gone inside of companies themselves. I could probably rattle off a dozen or so former office or division directors who are now within industry. And that closeness has led to a lot of criticism, right? I mean, if you are looking for a job at Pfizer, are you going to cozy up too much to the people internal there as you're reviewing their drug? There very much runs that risk, and that's been a big criticism of the administration, in particular those in the healthcare side of the administration. But there's also value too, right? I mean, I want to use these people because I want to understand what is the FDA thinking, what is this division thinking, if you truly be unbiased and truly eliminate conflicts of interest and any sort of quid pro quo, then it's enormously valuable, right? I mean, if you are Pfizer, you want to know what the regulators want in terms of clinical trial design, in terms of what's the endpoints they really care about, what's going to sync a program, what's going to make it be successful. So it's important, and it's very I find it very hard to go back and forth with that ethical dilemma. And really understand it. The other funny thing that we were saying internally, and I think this is not to poke fun at Trump, but right, there's a lot of inconsistencies in the administration, right? On one hand, on the healthcare side of things, they're very very much against sort of industry and regulatory interaction or coziness to that extent, but there's other areas where they're completely deregulatory. So I said, well on one hand it kind of has really bad PR to hire Cavazzoni. I said there's probably at least a 20% chance that in the next 6 months we hear that the FDA is going to be completely eliminated and Pfizer will just handle regulation of drugs from here on out. But yeah, I mean, it definitely was a controversial thing to see happen last week.
Yeah, it's interesting. She was criticized when she joined FDA because she worked at Lilly and Pfizer, and now she's criticized for going back to industry. But the whole idea of what constitutes a conflict is interesting to discuss. For example, I got in a discussion with Vinay Prasad. I'm not sure if you guys are familiar with him, but he's very prominent on social media, and he came out with a statement saying, if your oncologist has ever taken any money from pharma, you should fire them and find another oncologist if your family members has cancer or something like that. And he and I got in a discussion about this because, that would essentially be removing the most highly regarded oncologists who participate in clinical trials and have a broad perspective on new treatments. And my concern is, people have other types of conflicts. So, for example, in the case of Prasad, he gets subscription fees and he benefits from making controversial statements. So sometimes conflicts may be less apparent and, some experts might be perceived as conflicted, but they, in the case of oncologists, they're usually very dedicated and caring people and want what's best for patients. So this whole topic of
Oh my gosh. Yeah, I'm so with you,
Yeah.
Daphne. And also the idea that look, what are you doing? When you're accepting money from pharma as an oncologist, what is the typical way you're doing that? It's because you were part of a clinical trial where you were like, I would like to see if this drug works and can help patients. Are you saying that doctors shouldn't do that because it's a conflict? And so what does that mean? We shouldn't have clinical trials, or doctors have to choose between patient care and just, clinical trials, like it just, I think you can really go too far. I think a key thing about conflicts is disclosure, right? Like that, I think just people being aware of, here's where I come from. And like, this is, these are drugs that are being studied. And the purpose of studying them is for X, Y, Z. And yes, it's helpful to have patients aware. You don't want a physician who's, actively encouraging patients to go on a trial where they might get, randomized to a drug that, has a very high toxicity profile with very, limited chance of benefit with like a poor standard of care arm. But then like what ethics committee is really going to approve that trial in the first place? So I agree with you. I think it's really important to, separate out like what are we really worried about with conflicts? How do we ensure appropriate disclosure and appropriate controls, right? So Brian, you were talking about Patrizia leaving the FDA. There's very strict rules about like her ability to like outreach to people on the FDA. Like, I think, I agree, like this, it's really not a good look for our sector, but there's actually quite a lot of controls in terms of, what she is able to do to like really, call a review team and like tell them to make a certain decision. It's like, one, she's not their boss anymore. And like, two, I think there's actual rules that says she's not allowed to do that. So I think we need to address this whole issue with a lot more nuance so that we don't lose the value of, collaboration that is required to get a drug to market.
The other control that's on the system here is moral character. And, I think most of us are scientists, all of us are scientists on this call. Many of us know many scientists. And generally speaking, scientists are wonderful people who get into the business of science or just the nature of science by virtue of being curious and analytical and driven by the truth. And yet there seems to be, in some circles, distrust, this underlying almost bias against the culture that is science right now. And that's really disheartening to me, and I'm sure many of you all as well. And I'm not sure quite where it's coming from and what we can do to fight it. Maybe maybe more science education is something that we need to pay more attention to.
Yeah, it's a good point. I think that there's a lot of blowback from everything that happened in COVID and some perceptions of the scientific community being dismissive and also a little bit arrogant, I think, towards the rest of the world. So we're dealing with a little bit of that as well. But hopefully it's going to be more balanced going forward. So we're almost at time. I think we had a couple more topics that we wanted to touch on. Eric, you and I were going to talk a little bit about networking best practices. And I don't know if you want to kick it off and then I can comment as well.
Yeah, I think what stimulated this is our back channel discussion, Daphne, on your very eloquent post on X, where you provided some feedback to folks on how to reach out. I think all of us on this call get pinged on social media or email or other channels all the time, probably with requests from younger people to network. And first I'd say keep those requests coming. None of us are so old that we don't remember how difficult it is to break into the biotech industry. And I know we're all on some level flattered that when we do get pinged, it's because we're viewed as trustworthy enough to be sought after for our advice or our help. And oftentimes I'm very, very impressed by the way in which some of the younger generation approach networking with a maturity and professionalism that I never had at that stage of my career. But yeah, every now and then we kind of get a request, Daphne, that might fall a little bit short of the mark. So why don't you continue with a quick summary of your thoughts?
Yeah, so I mean, I think that what prompted me to post was actually a positive interaction. So I had somebody reach out to me and say, this amazing person that worked with me just applied for a job, and if you want to talk, give me a call. And I went, and that made me go and talk to our HR person and say, I just got a inbound, unsolicited feedback on one of the candidates, and it sort of prompted, it moved that person up. And then on the other hand, you get people who reach out to you. And I was thinking about, like, earlier in your career, you want to network for the sake of networking. But, some people, as you get busier, there's less of an interest for, networking for the sake of networking. And there's some unwritten rules that seem to be worthwhile talking about. And one piece of advice that, I put out there, and I'm happy to get feedback on it. One piece of advice is to be very straightforward and specific about what you want when getting introduced, because people sometimes get connected to a CEO or someone senior within pharma or an investor like Tess, and they say, "Oh, I want to pick your brain," or "I want to ask for career advice," or "I want to hear about your company or your journey," when what they really want is a job, or they really want to expand their network and just be able to know more people. But if someone's busy, it's better to come with specific ask or a goal, a goal that you want coming out of it. And then I was also thinking about the concept of helping or being polite. And as you mentioned, Eric, a lot of us want to help others and make introductions. But if somebody asks you to make an intro to a high-powered person, and I'm not talking about myself, I'm saying, like, if somebody asks me to make an intro to somebody else I know, initially you may feel like it's impolite or unhelpful to say no, but every time you introduce someone to another party, and if that party, like, let's just say it's somebody at Big Pharma, if they view that introduction as uninteresting or low value, you've now taken an axe to your relationship with that person. And that hurts you. It also hurts your ability to make other connections in the future. So, what I was saying on this sort of thread was doing some research can help. And also sometimes, understanding this principle of hurting your connection and protecting your network makes the connections you do have more powerful. There's other best practices like the dual opt-in, meaning you ask the receiving party if it's okay to make the intro, and that takes the onus off of them. So they're not having to reject someone they don't know, and also, I think, preserves the relationship. So I'd love to hear from others, just open it up. And, I got some positive feedback on my thread, and I also got people pushing back because I think they thought there was a perception that it's like, oh, you're too busy to take these connections. But I think the point is really that there's a way to do this and be effective and build and strengthen your network. And there's a way to do this where it actually hurts your network. So I'll open it up and see if anybody wants to comment. Can you guys hear me?
We
Okay.
can. We can definitely hear
Okay. Keep
you.
it coming.
I think it's a it's a really, it's a really good question. I think, a lot of it also just depends on the on the closeness of the individual asking. I mean, there's so many factors at play. I do think that just specificity of, like, hey, here's what I'm looking to understand, right? Like, I think your best practice example is like it's a very good example, right? What can be hard is people who maybe aren't quite sure what they're looking for yet, right? They're like, ooh, I'm at like a big pharma. I'm kind of interested in like learning about small biotech and understanding, like, is that something that I want to do someday? And I'd just like to get to know some biotech people to understand what that career path looks like. I think if you actually spell that out, right, and make that intent clear, I think there's a lot of openness to, like, sure, there can be a more open-ended discussion, right? So Daphne, I don't take your advice to mean that you have to be, very specific about, like, I'm looking for a job or I'm looking for this. It doesn't need to be this, a kind of transactional thing. I think that you can, have these networking conversations that are more open-ended questions. But I think sharing the motivation can often be really helpful so that that person can really direct their conversation with you, and also potentially help facilitate intros with people who may be even more relevant for them to talk with.
Yeah, and also who might be open to that kind of more open-ended networking versus who you might want to come to with a specific request, and that's actually an important piece of it.
Yeah, and
Any,
definitely,
yeah.
yeah. Let me be, and so I agree with a lot of what you said. Kind of resonated, and I think that one element, as you said, if you're more direct, the person they might be reaching out, wanted to talk to you, but you might actually have a friend or a colleague who is probably better suited to specifically discuss what they're interested in. The one thing that I find to maybe resonate a little bit more is if you get one of those, hey, I want to hear about your company or I want to hear about your career. That's certainly one way to do it. Another one that I find a little bit more compelling is when they say something very specific. You know, we know you work at XYZ and XYZ does it. When they show an effort and an interest, or they touch on something you've done, that they double click on that. There's some effort and some proactiveness. I think that just shows more diligence and a little bit more seriousness. And that might lead people to be more inclined to take the meeting.
Yeah, that was actually one of the points that a lot of people who are responding to the thread said, do some research. And I think that that's a really great point because if you do a little bit more research, you're more likely to get good results. And also, that's viewed as being polite because you spent the time to really understand the person that you're asking to meet with or the person who's making the introduction. So I think we're out of time, but I'd like to last comment, last question. I just heard that NASDAQ is announcing plans to move to 24-hour trading. Anybody want to comment on that? And then we'll close out the room.
It sounds terrible, but shouldn't actually change too much because I would expect that what's happening overnight is probably very low volume. Not sure if others have a standpoint, but we currently have pre-market, post-market, right? And you see stuff move around. Certainly, when there's like a data event or something like that, sometimes those moves can be more significant. But I would be surprised if we see very high volume starting at 3 o'clock in the morning under this new policy.
I, for one, am very much looking forward to the 3 a.m. call from a client asking, "Why is stock XXXX up 10% right now?"
That's
On 5 shares.
well, but
Great.
Brian, that's when ChatGPT takes the call and answers it for you.
You're going to put us all out of business, Yaron.
I gotta tell you, for me, I don't know, I kind of love innovation and technology, and I feel like you could have argued back in days where we all used to meet up and underneath the tree to trade stocks, and now it's all computers trading with computers. That's going to lead to innovation. It's going to lead to more complex for sure. Yeah, probably going to need two Brian Skorneys at every firm, right? One in the morning, one at night. But I think that could be interesting. There'll be probably mayhem in the beginning, but things will sort out, no?
Hmm. Okay, well, thank you everyone for an excellent discussion. It was a pleasure speaking with all of you, and thanks to everyone who joined. And we wish you all a great weekend and see you next week on Biotech Hangout.